Yeah, I mean, it is impressive. I mean, how much a money printer in Brussels or Washington or Tokyo can do for an economy, for a market. Those are often two different, very, very different things, often confused as the same thing. Um, no one can define the expiration date of this bacchanalia, this what I consider a completely artificial economy and an artificial market. The idea, that it was a fringe theory years ago, modern monetary theory, that you could monetize your own debt and then, and call that a solution. I mean, if you told a 10-year-old, look, if we just print money, and then if we need more money, we'll keep printing more money. I mean, it sounds so simplistic, but it's so ridiculous. And yet, when the markets are ripping and times are good, the idea of solving a debt crisis with more debt and then paying for that debt with money that's literally mouse clicked, no one wants to think of how absurd that is when it's so patently absurd from the very beginning. It was meant to be an emergency measure in 2008, 2009. Bernanke at the time said just a year, no more. And then QE1 became QE2, QE3, QE4, Operation Twist, Unlimited QE. It went on for well over a decade now. And then, of course, in March of 2020, we went from a $3.5 trillion balance sheet to a $9 trillion balance sheet in a matter of 1.5 years. We printed more money in 1 year than in the from 2008 to 2014 and onwards. So it seemed like the perfect solution. Again, if we had money printers in our basement, we'd all look very successful. Our tuition, our car payments, our mortgages, our social life, our vacation lives, all would look good because we could just, and who wouldn't get addicted to that? This idea, though, that, we have over 380 trillion in global debt and GDP at one third of that. In the US, we have over 90 trillion in combined household and corporate and public debt. It's an unfathomable number. It's frankly abstract now, kind of like a war crime. When there's so many deaths, it's hard to even fathom it. Once it gets but a certain number, it's the same thing. It's a financial crime, and it's hard. Again, this isn't even gloom and doom. This is just common sense. But common sense goes out the window when markets are ripping. I mean, I saw that myself in the Nasdaq bubble, in the dot-com bubble. I mean, I knew it was absurd, but we were all making money. And then the same thing lead up to 2008. We knew it was absurd, but when the markets were up, it's out of sight, out of mind. So your question, getting back to your question, this idea that it's just muddying along, well, it's really not muddying along. We've got the greatest wealth transfer in history in Western economies, certainly in the United States. This asset bubble that we've manufactured, engineered, the trillions of printed dollars, most of that went straight into the bond and market, which indirectly went into the U.S. equities market. So we had the biggest stock and bond bubble I've ever seen, and I've seen a few. I've studied a couple more. It's the largest wealth transfer in our history, and 90% of stock market wealth in the U.S. and the S&P, the Dow, or the Nasdaq is held by only the top 10% of the population. So it's really a wealth transfer, and it's really an engineered. I think it's an engineered fraud in a sense, because it's when you print money that's not linked to an actual good or service or a real asset. It's inherently inflationary. So no, I don't think it's sustainable. I don't think modern monetary theory or modern monetary policy is sustainable. It is a keg party par excellence, and it can last. I joke kind of cryptically that it's like martinis, or it's like a keg party. It's because it is an addiction. Metaphorically, it is an addiction. It feels great when you're buzzed and when you're riding it, and everything looks beautiful and everyone looks smart and every decision seems brilliant until the hangover comes and everything looks ugly, every decision looks stupid, and you look back and say, how could I have drank that much that weekend? But this keg party's gone on for years instead of months, and no one, including myself, can predict the expiration date. And an even more dark analogy, it's kind of like leukemia. My father had cancer, and thank God he made it through. But he was, some people, I've known people who've survived and some who haven't. But when you have a cancer in the system, some people can last for 15 years. Some people don't make it through the summer. And so, in a sense, we have a cancer in the system. We have an artificial system. We have a monetized debt system. We have record levels of debt. We have massive counterparty risk and broken exchanges. And so, again, and we can go into specifics on this. It's not an exaggeration. The debt scenario today is unacceptable, it's unpayable, it's unsustainable. And it's just a question of when the music stops. There's only a few chairs. There's a lot of people looking for those chairs. There's not a lot of liquidity. So no, it's not gloom and doom. It's not negative. It's not bearish. I can play markets long or short. So I don't need to be a bull or bear to sell a book or to sell a portfolio. I just don't believe it's sustainable. I'm not alone. I didn't think 5 years ago the Fed balance sheet would go past 6 or 7 trillion, and yet they did. And so I'm always amazed at how much they'll try and buy time with printed dollars. And now, of course, in the U.S., the Fed is trying to pivot. We can talk about that too. But at the end of the day, they've gotten so drunk. There is no solution. The hangover will be brutal. I believe in physics. I believe in, Einstein's eighth wonder of the world was interest rates. It's important. Interest rates matter, debt matters, physics matter. For every action, there's an equal and opposite reaction. And that goes to the Austrian School of Economics, like von Mises or Schumpeter. When you have this much debt, there's no way out of it without ruining the currency. And every bacchanalian debt party that creates huge market inflation and asset bubbles like this has an equal and opposite reaction. It will be the mother of recessions. It will be the mother of economic um, uh, I think implosion, not the end of the world, not Armageddon, but it will be historical, because for most of my financial career, I've had nothing but tailwinds and nothing but central bank supported markets. And my generation in particular doesn't remember the 70s or inflation, or certainly the 30s. And so I think academically and personally, we're about to hit into an abysmal period. I think the signs are all around us. That's a long answer, Anthony, but I mean, there's a lot of problems. The main problem is a fantasy of printing money to solve a debt crisis, and the debt numbers are absolutely unsustainable. The debt levels today, the fantasy of modern monetary theory or central bank policies all around the world. And I think the counterparty risks in so many markets are three of the biggest risks that are undeniable, not to mention all the geopolitical risks happening at the same time.